Hi everyone and welcome to our fortnightly market pulse. The sales market has seen a slight dip in activity heading into late June and into early July, with our firm noticing slightly less inquiry and inspection numbers coming through our home opens over the last fortnight. One adjustment we have noticed in the last couple of weeks is that we have seen more investor inquiry come into the marketplace. Buyers inquiring from Sydney, Melbourne, Queensland, and noticeably Tom Price. And the reason I think this is actually starting to happen is that the rental prices have kept climbing over the last 12 months, while sale prices have remained fairly consistent. Another reason I think investors are starting to come back into the market is previously we didn't really have any lender that was offering any favourable loan conditions for an investor, while some of the banks may be starting to offer slightly better conditions for investors, and then noticeably we'll see more inquiry from investors over the coming months. Still not hanging my hat that investors are actually buying yet, with the majority of the properties we're selling still going to an owner-occupier. So we'll see how that transpires over the next 3 to 6 months. Earlier this month, the RBA decided to leave the cash rate on hold, and most people will agree that the interest rates are likely to go up another 2 to 3 times before the end of the calendar year. But with the interest rates staying on hold, it still provides an opportune time for buyers to get into the market, as rising rents don't seem like they're going to be slowing up. A lot of people have been asking me what's going to happen for the remainder of 2023. And right now it does feel like there is a pretty good balance between the number of properties available for sale and the number of buyers actually walking through home opens and making offers on properties. And with that, I don't think property owners can be too bullish around price when placing their properties on the market. There appears to be a lot more property owners requesting appraisals of our firm. And when I track the data around the number of people requesting appraisals, we've seen an increase significantly in the number of people actually calling our firm and asking for an appraisal on their property. When I vet those owners and I ask them, why do you need an appraisal? Or I actually think you're selling. A lot of those people are coming off fixed interest rates and are now moving into principal and interest. So some people are moving from a $500 a month mortgage into a $1,500 a month mortgage. And for a lot of those people, they actually can't afford that and they're weighing up when they're going to sell. So my prediction is that we're actually going to see a bit more stock hit the market in the coming months as we head into the festive season. Maybe things will dry up a little bit more around stock levels. So with that, I don't think there'll be a massive price growth in the market in the next 3 to 6 months. I think things will be fairly consistent as we head into spring and then the festive season. So with that, I think the market right now presents a really opportune time for buyers and investors alike to be getting into the market. Rental prices are rising and there's sale prices remain fairly consistent over the last 3 to 6 months. And I think that'll continue on. And with that makes an opportunity to be securing a property at this price as opposed to potentially this price down the track. Thanks so much for joining me on our fortnightly market pulse. If you need any assistance from a real estate perspective, please contact Realmark Karratha on 9197 2600.